Good morning, everyone. You're very welcome this morning to another session of Reboot Your Business Through Your Business Development Plan from Griffith College, Dublin, Cork and Limerick in association with Chambers Ireland. My name is Michael Bozine, and I'd firstly like to welcome everyone this morning, all of the businesses who've joined us throughout the country, including those who are members of Chambers Ireland. We're delighted to be providing this series in association with Chambers Ireland. We do invite you to follow the series and engage on social media using the hashtag Reboot2020. Please look out for all of the content that's being shared, and thank you so much for sharing your content so far. Thanks also to everyone who's been in touch with us from the emails that were sent out over the last few days. We really do appreciate your feedback, and we're trying to build in all of the feedback and questions into the upcoming sessions as well. So if you have any questions, please do reach out to us, either myself or Geraldine, and our emails are on the website, and you can also reply to the emails that have been shared with you. Thanks also for engaging on social media to the open call. We really appreciate that. So we have a great lineup for you today. I'd like to say as well, just to use the Q&A button at the bottom of your screen to ask questions throughout, and we will get to those questions later on before the end of the session. The workbook is also available online, which you can download and use throughout the session. It's a practical resource. And also just to mention that the slides and all of the resources from today's session will be available on the Griffith website shortly after the session today. So with that said, I hope you enjoy the webinar today, and I'll hand over to my colleague Sinead O'D in Griffith College, Cork, to bring you through and introduce today's session. Thank you very much and enjoy.
Thank you, Michael. And good morning to everyone tuning in from all around the country. It's a new week, and I hope you're feeling good and ready to get started on making lots of plans and working on your business plan for the coming sessions that we have lined up for you this week. Today's topic is, how do I manage cash flow in a crisis? And without question, one of the most pressing issues for business owners and business managers right now. It's challenging in the good times, but in an economic crisis, business managers need an action plan and some help to navigate a crisis and come out the other side intact. So we have two great speakers to help you with that today. But before we introduce our two main speakers, I'd like to introduce James McKiernan he's the Director of Relationship Management with Chambers Ireland, and Dr. Tomás Mahukagáin, who's the Director for Academic Programs at Griffith College. And they're going to just say a few words as we reach our halfway point, and also to share some really exciting updates. So I'll pass you over to James now. Thanks, James.
Morning. Morning, everyone. Delighted to be with you this morning. Thanks for that introduction, Sinead. My name is James Kiernan, Director of Relationship Management with Chambers Ireland. I work with chambers all around the country. We've 40 chambers in our network, and we're delighted to be able to partner with Griffith College on making this course available to all our members across the country. I'd also like to thank my team in Chambers Ireland for working hard on this, and the team behind the scenes in Griffith College for their work in putting this all together, and all the presenters that we've had so far, and for the rest of the course. As Sinead said, we're about halfway through, so we're really getting into this course now, but the end line is coming into sight. As we move towards that, participants might want to think about the mentoring element of the course. Mentoring support has been made available, and that's with thanks to Skillnet Ireland for covering the cost of that mentoring support. And that's available to all participants on the course. It's Skillnet Ireland, if you're not familiar with them, they're an agency that support businesses and industry in training and development right throughout the country. And it's a lot of enterprise-led initiatives going on at the moment for businesses to help them through the COVID-19 crisis. So thanks to Skillnet for this. As I said, there's a limited amount of spaces on the mentoring course. So if you have interest as you go towards the end of it, if it's something you like to do, please register your interest on either the registration page on Griffith College or Chambers Ireland's website, where there'll be further details. I'll now pass you back to Thomas, who'll just maybe talk about that in more detail. But best of luck, everybody, with the rest of the course, and I hope you get some great value out of it.
Thank you, James. Hello, I'm Tomas Mac from Griffith College. Well, that's what the background shows there in the photograph. That's South Circular Road, Dublin campus. But actually, like everybody else, I'm working from home, out of a bedroom in my case. I'd like to thank you for joining us today and taking the time out of your day and prioritizing this slot and the bandwidth in your house and taking the time to share and use this time to help you with your business. It's an enormous privilege for Griffith to be involved and to be here in this process. I'd like to thank Chambers Ireland, James, Kia, Gabe, and Ian for their support, and indeed the support of our own team in the college who've made this possible. It's a great privilege for Griffith to be involved with Chambers and to be directly involved with business managers. It's enormously helpful for us that you send us in those queries so that we stay on message and we don't go off in some academic theories about wonderful research here and there, but stay earthed to running businesses. We're a business ourselves. Griffith is a business, and it too is not unaffected by COVID-19. All our students are studying all over the world. We've nobody on campus anymore in any of the campuses, and life has changed, and nobody living on campus for the summer either. So we know a bit about what you're feeling as a business, but we're lucky because we've been able to stay open, and we know it's an awful lot tougher for many more. So I'd like to follow up with James's news. It's hugely, hugely positive that there is mentoring support provided by Chambers with SkillNet. Independent, expert advice and feedback on your plans to see do they make sense. So I encourage you to use that and get that feedback and support to make your plans work for you. From our side in Griffith, we'd like to add to that by offering our certificate in SME management. This is a recognized qualification, nationally accredited by QQI, Quality and Qualifications Ireland, the body that manages all third level qualifications. The certificate requires really about 250 hours of effort, but there is no business manager out there who hasn't spent the last 6 weeks, at least 40 hours a week, thinking of nothing but their business and their business plan. You're at the halfway stage. You might be using the guidebook there or the notebook there to jot down views, and you're thinking about your business development plan. Well, if you want to submit your completed business development plan when it's done for consideration for a national award, we'd be delighted to support that. The details are on our website. The program is entirely free to you, like all the other aspects of the program. So please avail of it. The additional work is not huge. It's just about formally presenting your plan and being able to defend it for about 15 minutes or so. So finally, I'd like to wish you well. I'm going to get off the stage because you're far more important people to listen to today. Owen McGee and Noel Daly, the finance experts who will take you through the cash flow. But thank you for being with us today, and best of luck restarting and rebooting your businesses.
Thanks, Tomas. That's great. So let's get started. I'd like to introduce you to our speakers today, Noel Daly and Owen McGee. Noel Daly is a qualified accountant, and he's also the academic head of Griffith College, Cork, the campus where I'm currently located. Noel has more than 20 years experience of lecturing accounting in Ireland and across the world. So he brings a wealth of practical and academic experience to the session today. Owen McGee, he's a certified financial planner. And in addition to his private practice, he also presents the popular RTE1 TV show, How to Be Good with Money. Owen recently achieved a long-held goal of writing a book by the same name as the TV show. On March 3rd, the first box of the new book arrived in Owen's office, and they were due to be on the shelves of all good bookstores on March 18th, and then Ireland went into lockdown. So no doubt Owen is applying all his cash flow and inventory management skills and expertise right now also. But for today, he has kindly agreed to share that knowledge and expertise with you. So with your notebooks or your workbooks at the ready, use those 3 questions to gather as many tips and pieces of advice from Owen and Noel. Thanks also for sending in your questions in advance. That's really helped Owen and Noel to build the slides for today. But also use the Q&A, as Michael said, use the Q&A function on your screen to send in any additional questions, and we will take those questions or put those questions to Owen and Noel at the end. So Owen and Noel, when you're ready, let's go.
Good morning, everybody, and a very warm welcome to you. Coming here from Cork City, beautiful sunny day, and I hope it is wherever you are, and that you're safe and well, and that your family and your loved ones are also safe and well over this very, very trying period. Owen, good morning and welcome.
Good morning.
We have a lot to say. It's a fairly big topic. It's a very hot topic, perhaps one of the most sought after pieces of information, because every business up and down the country at the moment is in some sort of cash crisis, I would imagine, of some description.
No pressure, so no. Yeah, that's fine.
No
pressure on us at all. Yeah, no, we've got a lot lined up for people today, and hopefully people can throw the Q&A at us as well, because obviously we are trying to deliver the content we want to deliver. But if people do have questions, I would encourage them. We'll try and get to as many of them as we can. But I think we've lots of stuff that people are going to get a lot of benefit out of.
Great. What I'll do so is I'll begin sharing my screen here. There's a number of slides that we'll go through, and we'll discuss the points, and myself and Owen will be discussing between us what we think are probably the most relevant points for each part of your cash management plan. So I'll just bring this up here on screen and we shall commence. So bear with me for one moment. We have that. So it should be there, good to go for you. So cash management in a crisis. Cash management at any time, as Sinead mentioned in her intro, is exceptionally important. But now that we're in the middle of a full-blown lockdown, and the knock-on effects have been very, very dramatic. So over the course of the day, what I'm going to take a look at over the course of the session, really because it's a very significant area, we're going to take a look at some key things that you really need to do, and if you haven't done so already. So we'll begin by looking at, taking a bit of a deep dive into your company, knowing where you are, what the company is about, and being able to explain this very quickly to relevant people like banks, like financiers, like funders that you might be talking to in the next few weeks. We look then at trying to assess where you are from your cash point of view, and then the 3 central planks of any working capital management strategy will, to a greater or lesser extent, involve the management of your debtors, creditors, and stocks. Now, I realize that there are many different businesses and types of businesses tuned in here this morning. Some will not be carrying stocks. Some will not have debtors to worry about their cash businesses and so on. So these are general points, and we can get maybe a little bit more specific maybe in the Q&A, but hopefully you'll pick up a few tips in terms of budgeting and so on. That would be extremely important. We'll take a quick look at with the banks. And I think the banks will play a key role, and will play a key role in the recovery. And I think, Owen, from the get-go, it's worth pointing out that you and I, we'll have lived through, like most people out there, the last 10 years of austerity and so on, and the crash that came in 2008. But this is a very, very different one, isn't it, in terms of the banks?
Yeah, so I think one of the key differences, I think most people will remember, have had some involvement in 2008. And 2008 was a global financial crisis, as we all know. But the problem there was banks didn't trust banks. There was no money flowing around between banks, and they didn't have money to give out. being a bit inhumane about this and taking the humanity element out of it, this is a medical problem and there will be a medical solution. And when the medical solution becomes available, the banks have the money and the trust. We don't have to rebuild trust here. The banks do have money, and not only do banks have money right now, and we're going to look at it a little bit later, but banks have money and they have support from government here too. So we're in a very different place this time than we were in 2008, where the banks themselves were the problem. Now it's a medical problem, and there will be a medical solution at some stage.
Great, thanks. Yeah. From that, then we'll take just a very quick look at dealing with the revenue commissioners as well. That's a topic that one or two people have asked about as well. And I'm glad to say that the revenue commissioners have been quite proactive in this and have put forward certain measures. And again, I'll just touch on one or two things there as well. Then swinging around just to use the available expertise. And there's a wide range of expertise out there to help you, not least with your own financial accountant that you have retained, or your advisor or whatever, plus the local chambers and the enterprise boards and so on. And then we'll take a quick look perhaps at some of the range of government assistance that is out there. So I think in creating any plan, and particularly with cash management, it is a real rinse and repeat job. You have to be relentless in this, and it's every week, every month. It's a game of inches as you go forward. But your starting point always with anything is to assess where you are. What is your current position? You then need to devise a plan, execute that plan, but then constantly come back and review that plan. It's not good enough just to have a budget and then put it on the shelf. You have to constantly come back, look at the budget, see have targets been attained. If they haven't, why not? Can we adjust? And then adjust the new plan, and off you go again. Reassess, plan, do, review, round and around. And central to all of that, and it's a point myself and Owen will be coming back to time again over the next 45 minutes, is you must engage. You can't put your head in the sand here and hope things will go away or hope things will right themselves. You have to be very proactive in dealing with the different stakeholders in your business, your customers, your suppliers, your employees, the revenue, the bank, and to make contact with them, and to, I suppose, to cement any relationships that you've built up over the last few years in your business. This is now not the time to withdraw from that. This is the time for action. And again, Owen, I think you'll support me in the necessity to engage. And that's what you've been advising your clients very much, I'd imagine.
And one of the things that you do need to take from this is the assessment is so important. And particularly doing the assessment before you engage to communicate with the people who are, whether they're customers or whether they're people who owe you money or you owe money to, or your bank or whoever it is, or revenue. Knowing where you are is the starting point for all of this. And I know this particular session is about cash flow and about money in and money out, but there's a real thermometer that we would use. It's a temperature gauge for someone's finances or a company's finances. And that's to do an assessment on a regular basis about what you own, what you owe, what you earn, and what you spend. And oftentimes we worry about things and we're concerned about things. We do that simple project, that simple task of writing down what we own, what we owe, what we earn, and what we spend. And we get an absolute picture of where we are. That's our assessment. We know where we are. And that's when we can come up with a plan. And that's what we can do, what we need to do. And that's once we've done what we need to do, that's when it's time to start reviewing again. Right now, reviewing is really important and doing it on a regular basis. But then when you've got that and you're armed with that information about you and where you are right now, what you can do then is you can engage on a much better level with the people who are important to you and who are important to your business.
Thanks, Owen. So let's begin. And what I was saying there at the outset is the first thing, and just to reiterate, I suppose, what Owen was saying, the immediate thing would be to carry out a deep dive into your business, to see what's going on and see where you are, because these are the questions that you will be asked. If you're going for government supports in a while, if you're going to approach your bank, if you're going to your landlord or whatever to try renegotiate, you need to know exactly where you are. Now, first and foremost, since we're looking at cash, you need to assess what your short-term cash and working capital needs are. The huge focus is going to be on liquidity, making sure that you have enough cash and that there's cash coming in. Perhaps over the last 5 or 6 years, it has been more about building the balance sheet, the assets that you have and so on. But now all attention goes to liquidity. Where's the cash coming from? Where's the cash going to? How much cash do you have? And to keep an eye on any covenants that you've already entered into. There are some businesses that have already entered into agreements with banks on previous funding arrangements, and there may be certain conditions imposed upon them on the level of debt, for example, that the company or the business can have at any one time. So how is that going to change? And if those covenants look like they may have to be broken for survival, then you need to start talking to people. You need to start talking to the other parties very quickly. You have to get in down and dirty with all your costs. And it really is a deep dive into your costs. And it is a time, I suppose, to be absolutely ruthless with discretionary costs that can be avoided. And I know as the kind of good times began to come back, and I use that phrase sparingly, but we did see a turnaround in the economy over the last few years, and companies began to grow a little bit again. And there was a little bit of fat creeping back into companies. And a little bit of waste is inevitable then from that as companies get a little bit, I suppose, less vigilant. It's now time to go back and reinvestigate the company and those costs. But as I say, just be very careful with the costs that you do cut. I mean, it's a real kind of Solomon job here, that you have to be wise. Yes, we have to cut costs, but we also have to be ready for the bounce back of business that hopefully will inevitably come once the lockdown ends. So, for example, you know, training and education, the business that I'm basically in, is hugely important to companies, and the need for companies to upskill their workers at all times. So that might be the first thing to go. But as we enter into what's probably a new economy at this stage, and a new sense of what is normal, you need to have one eye on the skill set that your workers have, and are they adequately skilled for what's going to happen. So yes, you can cut training budgets, but you do need to keep an eye on the necessity for workers. Your payroll costs, again, can keep an eye on those if they can be reduced. It's tough on employees, but there are certain things perhaps that can be done by businesses at this time. Things like, for example, availing of the government subsidy scheme for wages, perhaps looking at maybe short time for your workers for the moment, perhaps encouraging your workers to take vacation times or paid leave at this stage. But again, anything I would encourage you to with payroll should be negotiated, and with the loyal workers. And also I just mentioned to review your credit terms. So if you're selling goods on credit, now is the time to go back and look at the terms and conditions that you have been applying perhaps for the last 2 or 3 or more years, and see, do they stack up in the new normal, in the new business environment in which we find ourselves. And again, Owen, that's an important point. I think that it's going back to basics again, looking at when you sell goods to somebody, you're giving them 30 days, 40 days, and you have to stick to that. Or perhaps you're going to have to say, look, I'm going to have to cut that to 25, but you have to keep an eye on competition then at the same time.
There's 2 brilliant things going on at the moment. One is that we're all in this together. Like, it's nobody's fault. Nobody's done anything wrong. You can't take any personal responsibility for mistakes you've made in the past with your business. We're all here at the same time for something that had nothing to do with anybody. It's just one of these things that happened. But because we're all in it together, it means there's a lot more understanding between customers and your providers, and all of these people are all in the same boat. So everybody just, what we don't have right now is clarity. We don't know when this thing is going to be over. We do know we have some phased reintroduction of the certain phases we're going to go through as we open up the country again, but we don't know where this COVID-19 thing is going to bring us. And the more clarity you can give to each other, to your customers, to your providers, the better it is for them, but how much better it makes it for you. I do think that that's really important. Speak to people, talk to people. But there's another point on that slide that I wanted to come back to, which is how quickly the bounce back is going to come. I've said it already. The trust is there between the banks. That doesn't need to rebuild. What will happen here is when a vaccine is identified, you will find that the macro business will fix very quickly. Stock markets don't need money to be available, or the vaccine to be available to everybody right now today. They just need to know it's going to be available in September to everybody, or in March. And then stock markets work out where things are going to go, and stocks start to be sold and money starts to flow at the top level. It's the bottom level, it's the micro economy that really needs to get going again. And that's about confidence, and people having a confident ability to spend, and to spend money in your business, and you to spend money on providers and all the rest of it, and it getting going again. But do remember, it could happen very quickly. So don't be ruthless. cut the fat, cut the things out of your business that have just creeped in over the last couple of years, that you really look at all your direct debits, all of the money that's coming out of your bank account, and really think about what it's like what business would be like without certain things going out of your bank account. Could you do without that piece of software? Could you do without, I don't know, the other things that just have creeped into the business? Be ruthless about it, but do be conscious of the bounce back and how quick it could potentially come with a bit of luck.
So continuing on, I think with that then as well, at the top of this slide here, and I looked at the verb in this, to cherish your existing customers, and whether that was overly fawning, but I don't think so. I think what you really need to do is to look at who your customers are at the moment and really value them, and see in the lockdown phase, is there anything that you can be doing to add value to them? Again, letting them know that you're still in business, you're still around, and the products that you're selling or the services that you're giving are still there. And you want these people, you need these people as soon as the lockdown ends for business to recommence. I think that you need to communicate with your stakeholders. You need to identify who your stakeholders are, and there's lots in businesses. And again, it depends from the small, one-man, two-man show to the company with 5, 20, 30 employees. But you have a range of stakeholders in your company, from the banks, suppliers, customers, employees, the revenue commissioners, your insurance providers. Again, begin the process of communicating with them, letting them know you're still in business and that you'll be back as soon as the shutters can go up. We get then to the idea of budget preparation. And I know from my experience for years as working as an accountant that there were many clients that I had, very successful business people, but who just hated this part of the business. The preparation of budgets, the numbers, they just pass it over to somebody else. But it's time now to kind of grab the bull by the horns here and to start preparing budgets. And I'd be looking at the preparation of what we call rolling budgets. Now, rolling budgets are where you prepare budgets perhaps maybe on a quarterly basis for the next 3 months, and then for 6 months, then 9 months and 12 months. And as you go forward and you come to the end of the first 3-month period, it's kind of deleted from your budget and you add 3 months to the end. So you're always kind of looking at 12 months. And as the experience that you get as you go through and you learn more about where you are, you adjust your budgets, they become more realistic, and suddenly the budgets for the 3 months, the 6 months ahead are far more, I think, manageable, and they're more realistic and they're more verifiable. So the budget preparation will be key. Now, we'll be focusing on the cash budget part of that, but I'm talking here about the full budget of all your costs and your production and so on and so forth. And also, we'll come to in a little while the government supports that exist. And there are quite a lot of them at the moment across different sectors. To be fair to the government, they have tried to bring in some of these supports. Now, the thing to remember with supports is that we should look at them perhaps as kind of almost the icing on the cake. Before you get to them, you need to have your own housekeeping done, that your business is as lean and fit as possibly can. And then the government supports, I think, will add extra then to that.
Yeah. And there's two things I'd say on that. First of all, the budget, a rolling budget is a great idea, because we're all sitting, think about how you felt 3 or 4 weeks ago. 3 or 4 weeks ago, we really couldn't see the end of this. Now we're starting to see the end of it. It's about how we're being communicated to by government, but we're starting to see, and for most businesses, they have some idea about either they're back to work already or they know when they're able to go back to work. And that's when the planning starts. So if you can imagine what the budget you would have created was 4 weeks ago and you compare it to now, it's probably a very different budget or projection or forecast about where your business is going. But there's a lot to be learned in that. And the reason why there's a lot to be learned in is because we generally assume things are going to be a certain way, but the reality is that things are never as bad as we think they're going to be. They're never as good as we think they're going to be either. But planning for the worst, then as things start to change and you look at the budget you made 4 weeks ago and compare it to now, you start to realize this isn't actually the worst. This isn't as bad as I thought it was going to be. Sometimes if we're not very specific about I'm doing a budget and physically writing it down or putting it into Excel or whatever way it is you want to do it, sometimes if we don't do that, we kind of morph into a bit more positivity, but it's not as blatant to us. So that key idea that Noel is sharing there around a rolling budget, creating a budget now about how bad you think it is, and then looking at it again 4 weeks later and saying, actually, in the space of 4 weeks, things have got much better. there is an awful lot more happening and going on, and the future isn't as gloom as I thought it was going to be. So don't underestimate the power of getting stuff out of your head, putting it down somewhere that it's recorded, and then looking back on it in a couple of weeks' time to see how much things have changed.
Absolutely. So I'll just get my screen going there again, sorry. Now, in terms of your stakeholders as well, we said, look, that there are many different elements to this, the revenue commissioners, your banks, your suppliers, your customers, and so on. What you got to do at this stage, I think, is make a plan and prioritize them in terms of cash flow. Who are the absolute ones at the top of the list that you cannot afford to annoy, to lose goodwill with, or whatever, and engage with them. So you list exactly, like if you don't meet certain commitments, the sky falls in. Who are those people? Who are those organizations? And they become your top focus. Now, you engage with everybody, and when you put into an action plan with each stakeholder, make sure that it's agreed. You're not doing this unilaterally. You're not deciding yourself, look, I'm going to withhold payment to my landlord, or I'm going to withhold payment to my creditors, and so on, just off your own back. You have to negotiate with them, or there will be trouble up the road for you. Now, we talked about the cash budget, and Owen mentioned it there as well, the necessity for it. One of the things you need to do straight away is to look at the cash that you have available to you. And I know companies and some businesses hold multiple accounts across different banks and so on. So it's important to assess exactly what is accessible. Some businesses have put accounts into, or money into accounts that perhaps need 30 days withdrawal or notice of withdrawal or whatever in order to get a higher interest rate or whatever. But assess, where are you? What cash do you have? And then as you begin your cash budget, and I'll show you an example of a very simple cash budget in a moment, but look at the assumptions that you're using, that you have used up to now. And do you now need to go back and say, right, look, we're going to have reduced capacity. The market has shrunk for the next few months or whatever. I'm going to have difficulty reaching 70% or 50% or whatever it is of my normal sales. Look at the revenue streams of the business that have been, or parts of the business that have been severely diminished or even shut down, and try to assess the length of time that the disruption will continue. As Owen said, there's a government plan to try and get the company or the country back on its feet again and open up on a phased basis, and to see where exactly your business fits into that plan. When do you start opening the shutters? When do you start selling goods again? When are you back in business as such? And we're preparing these cash budgets again for 3 months, 6 months, 9 months, 12 months, all the time. And when you prepare these cash budgets, okay, it's important that you perhaps prepare them on a number of different scenarios. So you could have 3 different cash flow budgets being prepared. One is the best case scenario. So what's your assessment? If things got back to where they were and got back very, very quickly, what's the sort of cash flow that you would be generating? What's the medium case? What's the worst case? And perhaps maybe as a basis for those of you who are around long enough, who were in business post 2008, and see what happened to your cash flow then, perhaps maybe use that as a starting point and say, right, I've experienced cash flow difficulties of this magnitude before. Look at what happened. My cash flow fell by 70% or 30% or whatever it is. Let's assume that here again. Or perhaps your startup year, if you started it only a few years ago, where cash flow is at its lowest ebb at that point, let's maybe take that as a basis for the preparation of the sort of cash flows that's coming in. Owen, we were talking before, and you mentioned as well that maybe another idea would be to actually analyze each customer that you have, and look at their ability to pay and so on. You might just mention
this is a very simple tool to use. Just take out an Excel spreadsheet, list all of your customers, list how much business you got off them last year, and one by one, say customer A gave you 100,000 euros last year. Realistically, how much do you think that customer is going to give you? Is going to be 70%, 50%, 30%, or 0? And if you take column by column, customer, amount of money last year, amount you expect this year, percentage wise, and work out the number. And if you do that case by case, line by line, you're getting into a deep dive there. But then you add up all the fourth column at the end, you add up the last column at the end, and you work out exactly how much you expect your revenue to be. The reality is when we're creating scenarios, best case, medium case, worst case, our projections are always going to be wrong. And we just have to accept that the projections are going to be wrong. What I would say is that I much prefer to be on the right side of wrong. And what I mean by that is that if we're expecting to get 100,000 euros of business and we put that into our projections for the next 12 months, and we end up getting 120, well, then I was on the right side. I was wrong, but I was on the right side of wrong. But if I project that I'm going to get 100,000 euros and I only end up getting an 80, then I was on the wrong side of wrong. And the important thing here is in my opinion, when we're looking at this, is look for the worst case and work backwards from there. And really see what changes you would have to make for the worst case and prepare for that and be ready for that. And as I said already, it tends not to be as bad as we think it's going to be. And it won't be as good as we think it's going to be either. So it's going to be somewhere in between. But it's a really easy tool to use. Just customer, amount they gave you last year, what you hope or expect to get from this year, and do it line by line can be very useful for people.
Yeah, because the purpose of the budget at the end is not just to throw numbers into a spreadsheet. It's to give you a sense of what's coming down the tracks and giving you time then to perhaps take evasive action. So if you see that, look, in a worst case scenario, August is going to be a desperate month for me. I now need, I have a couple of weeks or a couple of months to get some sort of funding in place to get me over this blip. So it's an advanced warning system. That's basically what it is. And if you are in and see difficulty coming, now is the time to start approaching the banks. And, you know, there's different schemes out there, like the Strategic Banking Corporation of Ireland have a working capital loan scheme for small and medium enterprises that, for example, might be worth approaching to get you over this blip. Postponing your large financial expenditure. So if you do have capital projects, if you're in a position maybe to postpone them temporarily until things begin to settle down. And one of the things actually, Owen, that was mentioned by a few people in the questions that sent in was, what do we do with rent? What do we do with our landlords? And unfortunately, I suppose you're locked into a contract in certain cases, but you do need to look at that contract. There might be situations for some people that where, you know, footfall has been shut down, that your rent perhaps can be renegotiated, or you go on a payment holiday or something like that.
And one of the things to be really careful, or really to really understand here, it keeps coming back to communication, and it's communication with banks and revenue and landlords and whatever else. Look at your contract with your landlord, see what it says about the different terms and conditions that apply to you. But it's possible you may get a break, you might get a 3-month break, but remember, the rent is still due. It'll still be added on at the end, unless you can come to an agreement with your specific landlord. There's nothing there from government or from anybody else to say that they have to just give up on the rent that you didn't pay them. But lots of landlords accept, because we said it earlier on, we're all in this together. Lots of landlords accept that if they can get a break from their bank, which most landlords are, but no problem, if they can get a break from their bank, well, then they'll be happy to pass that break on to you. Remember, it's not without cost. If you're taking a mortgage break yourself personally, or your landlord is taking a break from theirs, they're still being charged interest in that time. So if you're fair to them, hopefully they will be fair to you. There's a lot of the landlord associations, what they're telling me anecdotally is that they are actually finding the local agreements are working. And it's only in cases where your landlord, it's their only source, and maybe they're retired and your rent is their only source of income, or they're very heavily reliant on it, that other than that, in most cases, landlords are working with their tenants to try and help them through this. Because ultimately, and this comes, again, it comes back to banks, it comes back to revenue, it comes back, if you were a good tenant or a good banking customer or good to revenue before COVID, if you have a problem during COVID and then you become good afterwards, that's the type of person that these people want to work with in the future, provided the communication existed during the problem. But remember, landlords are worried too that if this continues, that they're going to be without a tenant, that they're going to be without you in 6 or 12 months' time. So they want to make sure that when COVID is over, that you continue to pay your rent. So they should work with you, and hopefully they are working with you.
Thanks, Owen. And also, like I mentioned there, I kind of skipped past it when Owen was talking. Your budgets, when you go back, review is so important. And you're looking at your budgets for the next 3 months, and then you're looking then as the 3 months go by, what targets did I hit? So always to look at your variances, look at the things that are different and why are they different, and challenge why they're different. Why is my sales higher than I thought? Did I really take an overly pessimistic view? Is it a temporary blip? An unexpected customer came out of left field, or whatever it is? But constantly go back and challenge and review and do again and so on. And just to mention here as well that there's a good little template on a web page here of the Banking Payment Federation of Ireland. Have a good page there on I suppose frequently asked questions. And I might just come out of the slides just for a moment and show you just the sample of the cash flow forecast template that they have given from that. So I will just come out of this here for a second. And where are we here? Okay, can you see that? Well, yeah. Can you see that? Yeah. Okay, so this basically is a very simple idea, and they've got it kind of pre-built for you here. And so what you've basically got to do is month by month look at your revenues in the first section, your expenses in the second, and they've itemized there the various different expenses you have, and down at the end then is your cash flow. So if I went, for example, to the month of May, and I saw that for the month of May, I expect my cash sales to be 10,000. So I put 10,000 into May. Let's say also that I expect that I'm going to draw down a loan. I'm going to go to my local bank and I'm going to borrow, let's say, 5,000 to get me over the hill from that. So you can see then that when you put that in, that the total, it adds up the total, and then you're going down here at the end and you're putting in perhaps your wages and salaries, including overtimes, commissions and things like that. And let's say that's just 1,000 from that. And then down here you have your electricity, let's say that's 450, and your business insurance payments and so on. You fill in these, and they will be different for different companies as you go by, as you pass by. So only you can do this. Only you know your business as much as you do. So you'll have then at the top the total revenues, you'll have then at the end here the total expenses, and then you'll have at the end of that then the difference between the two of these. And it tells you then whether you're in positive or negative cash flow then for the period. So again, I was tinkering on this earlier and I think I might have adjusted for me. So there we have it. So the difference between the cash going in and the cash going out for this month is 13,205, for example, or it could be negative. And what you'll see in these lines down here as you go from month to month is that these will be positive or negative. And if they're negative, you see when they're negative, and you're then planning to get over this blip. You need to put finance or some sort of plan in play to make sure that your direct debits don't bounce, that your payments to your workers don't bounce, that you have sufficient capital to get you over from that. So that link is on the slides as well. And the whole page is a good page for the Banking Federation there on frequently asked questions, worth taking a look at from that point of view. So we go back in here for a moment, where we were. And let's get to the kind of meat of the matter there as time is moving on into the central part of working capital management. Now, working capital management basically is managing 3 or 4 essential parts of your business. Working capital is basically your stocks, your debtors, and your creditors, loosely combined. And your working capital will be your inventory plus your debtors minus your creditors. Now, this is the eternal dance that's danced in companies, managing your working capital to make sure that you have enough cash coming in that you're liquid, but you also have an eye on profitability. So, for example, carrying inventory is a costly exercise, and the cost of that eat into your profit. But you do need to have enough stocks, for example, if your business depends on stocks, to have them in place to meet your sales as you go through. So it's not overstocking, it's not understocking, and so on. It's giving your debtors time to pay and giving them, if you're selling goods on credit to them, and giving them time and collecting that, and then being able to pay your creditors. And the whole thing goes round from period to period, from session to session. Your working capital cycle then, the trade cycle that you have, is the combination of these. You've got to minimize your working capital cycle. So if you look at the average length of time that you carry your stock and the average length of time that your debtors take to pay you, and you take off the days then that the creditors are giving you to pay, that's effectively your working capital cycle. And what you need to do is drive that down as low as possible. You need that as low as possible because you need the blood flow of cash coming through the body of the business. And one of the mistakes that's often made, particularly in a crisis, is that with trying to manage your inventory, your stocks, your creditors, that management may maybe focus in on a particular element of it and say, right, inventory, we're going to focus our attention on inventory. And we're going to make sure that we're going to cut our stock levels and we're going to carry the bare minimum. But what I would say is that it's a very much joined up thinking thing that you have to do. You can't look at these in isolation. You have to have a coordinated approach to handle your inventory, your debtors, and your creditors. And you need to get to understand the financial risks of who your main suppliers and customers basically are.
The other thing just to understand
the
other thing to understand there, Noel, is for people to understand is we hear this word a lot in the media at the moment, but there is a new normal. And the new normal is how we need to adapt our business. So just because previously you used to give a customer 30 days to pay doesn't mean in the new normal you have to continue to do that. I do think that everybody accepts, like you're sitting in your business and you expect things to be different from now on. And that means your customers expect the same thing too. And so too do your providers. So really look at what it is that that whole 3-stage cycle, what it looks like, and see how it needs to be adapted for the new normal for your specific business. And I think Noel has touched on it already. Nobody knows your business better than you do. And nobody knows how the business should be operating better than you do and what it looks like when it's good and what it looks like when it's bad. But you do need to make adjustments now that you may not have made before. And do remember, there are customers out there, like I do every day, I speak to 3 new customers, 3 new clients who want to come to me to my private practice. These people have been booked into my diary 3 or 4 months ago. So it's an interesting dynamic at the moment when you think about when they booked in for the appointment and when they're actually taking the appointment and how the world has changed. What's surprising me, and granted it is a certain niche of the market in terms of the type of people who reach out to us, but about 2 and 3 of those people are actually in a better off position at the moment. And I know that's hard for a lot of people to understand, but what's happened is that their wages have remained the same, but their expenditure has gone down. And if you're a B2C business, well, then there is still a huge portion of general society who have a little bit of extra cash now. And I'm not saying that, what I'm saying there is that the terms and conditions on which they buy, they expect them to be different. Like if you're a restaurant or you're a B&B, maybe not this year, maybe, or a hotel, maybe not this year, but because you just want to batten down the hatches and try and get through the year. But certainly next year, there's going to be a lot more of Irish people staying at home. And this applies across all businesses. Maybe your prices need to change next year. And I'm talking about them going up. Now, again, you know your business better than anybody else, but there's going to be more demand, I believe, next year for the tourism sector. Yes, we'll lose our international customers, but I do think the people who have money expect to have to pay more for the same experiences that they paid less for in the past. And there is still a large portion of society that haven't been dramatically impacted the way a huge portion of society has. And I'm not underestimating or diminishing the damage and the impact that it's had on a huge amount of people. But do remember, there are still people out there who have money and are willing to spend it and probably expect to pay a little bit more for the experiences that they've, or the things that they've bought in the past.
Absolutely. Looking at your debtors and looking at your sales, there are kind of 2 or 3 situations here, scenarios that we'll take a very, very quick look at. One is where your business trading is restricted or suspended, right? So that's the case where a lot of businesses from barber shops to clothes shops, where at the moment you just can't open the doors. There are other situations then where perhaps business is going on, you do have debtors, but who are unable to pay or unable to pay on time or perhaps unable to pay on full. And then you have the difficulty of predicting your current and future income. But as we've always said, you have to maintain and have to work at your relationship with your customers. If it's the case that your business is restricted, okay, and you know from the government plan at the moment when you're likely to recommence from that, it's important that I think you reach out in using every technique that you have, from social media to family contacts or whatever, to reach out and say, look, this isn't forever. We're going to be back in business. We're going to open up shortly, and you're using your social media to I suppose communicate with your customer base and let them know that you're still going and you will be there, and dispel any, to use that horrible phrase, fake news that might be about the demise of a certain business or demise of a certain town or whatever, that they're goosed because of this and they won't come back and many businesses won't open. there's a determination for most people to get their business back on track. And what you perhaps should be looking at, perhaps if you're in a town situation, that you could look at other businesses and join forces with them and create a story and say, look, here's the countdown is beginning, and encourage people to get involved and create this kind of community of businesses, but also interacting with their employees, with their customers, and so on.
And I'll say there, Noel, and I think I'm going to rob your phrase when we were preparing for this. Social media, if you're a B2C business, social media isn't an option anymore. Like there are so many people at home right now, your customers at home right now, who don't have the same commute, who are engaging on the likes of Instagram, and so all the platforms, Instagram, Twitter, Facebook. They do want to know what's going on. They do, again, there's a sense of community here. So social media is something that you really need to ramp up if you're not doing it. Give away stuff for free. I mean your knowledge. People want to understand, and don't underestimate how much that remains in a person's head later on. That when things do go back to normal, oh, that's the guy or the girl who gave me all that useful information when I needed it and I didn't have money to pay for it. And I'm not talking about giving away product. I'm talking about giving away the knowledge that you have that other people are interested in hearing. Working with other businesses is a really important key factor. And I would say, if you're in a community, talk to the communities and get the community, but think of the broader community. Like, I was talking to somebody the other day who has a B&B along the Wild Atlantic Way. And what I was suggesting to them is that, I don't know, if you're in Galway, contact a B&B in Donegal and another one in Cork, if you haven't done that already. And when you get a booking, say, do you know what, if you're doing the Wild Atlantic Way, here's a great one in Cork, here's a great one in Donegal, and ask them to do the same. People, because we're in it together, will be willing to help more than they ever have before. But also think about the businesses that you've supported in the past. So, for example, we would talk about, I'm involved in my local GAA club, and we are now putting a plan together to go back to all the people who sponsored our GAA club in the past, because they need us now. We've needed them in the past, but they need us now, and they need us to get a message out for them to our members. And this is where we all have to try and work together, because the quicker things get back up and running, the quicker the microeconomy gets working, the better it is for everybody, and the quicker we get out of this. So just think a little bit, I hate this term, but think a little bit outside the box. Yes, local community is important, but think about the businesses that you've helped in the past, or the clubs or associations you've helped in the past. Now's the time to cash in that favor. You've given them a favor in the past, you've supported them. Now's the time to get it back. But remember, social media is so important at the moment. I had nothing to do with Instagram before Christmas. I think I had 300 or 400 followers, and I have engaged with Instagram in particular as for my business, whatever reason, and it has just exploded. And people genuinely seem to be getting benefit from the information that you're giving out. And it makes, to be honest, from a kind of a selfish point of view, you feel like you're giving back at a time when I'm not a doctor, I'm not a nurse, I can't do that stuff, but I feel like I'm easing some of the problems that people have out there. And your business can do the same thing, and now is the time to give it out for free, because you will benefit from it in the long run.
Thanks, Owen. The other problem, I suppose, is the people who are trading and do have debtors, and they're trying to collect this, and those debtors are either unable to pay, or pay on time, or pay in full. This is a perennial problem. This is a real issue. And I suppose I'd begin with the basics and say, look, your housekeeping, the good housekeeping rules apply here. Your invoicing has got to be timely, and it's got to be accurate. So make sure every invoice that you're sending out is bang on in terms of the quantity of goods, the rate applied, the VAT rates, everything. Any errors in now can cause costly delays in you receiving payment. Look at your customers, go through them again one by one, and begin to understand their repayment capacity. And looking at your individual customers, identify those companies that perhaps, without any discussion with yourself as the business, that are changing their payment practices of their own accord. Are there people beginning to slow down, or are good accounts now beginning to become slow and falling behind? And what can we do there from that? Again, we mentioned before, looking at your terms and conditions, and perhaps now looking at maybe cutting the length of time that you give your customers to pay, and maybe looking at restructuring agreements, allowing them perhaps to spread out payments as long as they pay something, perhaps on some installment arrangement, or giving them discounts. A question that came in, and we might come back to it there at the end in the Q&A section, is the use of factoring or invoice discounting. And certainly there's a role for this, engaging in these institutions, these organizations that do provide finance and by you basically selling your debts or your debtors to them. And there's pros and cons, and perhaps I'll just come back to that in a little while. Another thing that comes up, what about the issue of offering discounts? Will we give discounts to our customers? And very often we do, but just be careful, because discounts can be expensive, and you need to always compare the cost of giving a discount with the cost of an overdraft. So you could continue perhaps to run an overdraft and be paying 10 or 12% or whatever it is on an overdraft, but a discount could be very expensive, could be far more than that. So always keep in mind, and I give you an example there at the end, that if there's a 3% discount for payment in 5 days or full payment within 40, that works out at an APR of 37%, which is hugely expensive. And perhaps that's not always considered by companies. And in predicting, we mentioned this, the difficulty in predicting your current and future income. Again, this is difficult at the best of times, trying to predict where we're going to be in 3 months, 6 months, 9 months. But it is this constant kind of coming back to it and updating and reviewing and changing and variance analysis and putting all that in play. Looking at again, the news, the broader economy of which we're part, and when is the country opening up? What are the stats on tourists coming back in? So building all that sort of macro information into your micro business there as well. The creditor management, the flip side of the coin then, is where we have bills that we have to pay, that we owe our suppliers. And now we have a problem perhaps that we don't have the cash flow, or I suppose the wish to let go whatever cash we have, and the tendency would be to hold on to it as much as we can. But you do have to be careful with the management of your creditors, because you've built up a relationship with them over a long time. You don't now need to start losing the goodwill that you fought hard for over the years. And it could lead, if you become a difficult payer, it could lead to higher unit costs. And also you're beginning to maybe lose out on the cash discounts that you might otherwise have got. So again, it's important that we have a good working relationship with our creditors. And again, it's going to them and making a kind of a negotiation with them, and something that is mutually acceptable to both parties. That we can't decide not to pay, we're not going to pay this week, and we maintain radio silence, and they don't know what's going on. They're calling us and they're getting annoyed at us, and we're getting annoyed at our customers. So you can see the necessity for communication here all the time, that we're not isolated here. And it would be very easy to undo years of good work in building up relationships as well from that. And I think that's a key point as well, Owen, is just that necessity to stay on good terms with people in good times and bad.
And this is a really difficult balancing act, because we do have to wear many hats as small business owners. And the difficulty here is as you've pointed out, Noel, we need to get money in, but we're reluctant to let our own money go out. What I would say is in general, with most people, treat others the way you want to be treated, and it generally works out. And I know there's a bit of kind of karma about all that, but the reality is that if you have communication open, and communication is absolutely key, but if you have communication open with the people who owe you money and the people you owe money to, you have a much better handle on what you can afford to let go of with your cash. I would also suggest that sometimes we concentrate on the big ones too much, or the little ones too much. And it's about getting that balance right. And this is where it's really difficult as a small business owner in particular, where you're trying to get that balance right. You can chase and chase and chase one customer who owes you very, very little. And you can get that win and you get all the money in, but it's not a drop in the ocean in terms of what else is going on. So make sure you're not concentrating on the cherry picking, the low hanging fruit, that you're actually chasing it across the board. You're applying it equally, the pressure equally, if you want to call it that, equally across everybody, but also that you're paying out equally, and the ones that are important to you aren't getting pissed off with you, I suppose, because this will be over and you need to maintain this relationship. And I'm going to be honest, in a year from now, or whenever everything is back to normal, what will happen is that people remember the negatives, that he never answered the phone, or she never got back to me, or whatever it was, much more than they will about the fact that you didn't pay them in full on time. It's about the communication, and it really is your friend right now. This is more important than ever before. Communication is key here.
So, yeah, I think that's a real the underlying theme for today, very much so. We might take just a quick look at stocks, because this again is a key point for some businesses. I'm conscious that some businesses, service providers and so on, don't carry stocks or large amounts of inventory, but it is an important part, and there's an important few points I just need to make on this quickly as we go through. Carrying stocks is an expensive business. Storing them, insuring them, securing them, the cost of money tied up in them, it can't be underestimated. What we now have is a situation also, to add to this, is that there's a risk of supply disruptions, in that we can't be guaranteed that our supplier, when things go back to some sort of normal, when the lockdown ends, that we will be able to access the quantity of goods immediately. It might take a while for the supply chain to get back up running, and we have to plan for that. And that there will be volatility on both sides, both in the demand for your product that you're manufacturing or selling to your customers, but also in your ability to get hold of the raw materials that you need. So you do need to plan for this, and you do need to look at the scheduling and the production planning that's built around this. There's going to be a significant waste for some companies because they deal in perishable goods, and it'll be just a fact of life that with businesses not open and your warehouse full of these goods, they may well have to go to waste. And also then, as the lockdown begins to hopefully come to an end, and we begin to build up our manufacturing capacity again, or not just manufacturing or selling capacity, we need always to look at having some sort of buffer stock, some safety level of stock. And it's trying to get that right. You don't want to have too much, but you don't want to have a stock out. The worst position for you will be in a couple of months' time when business is back and you can't get goods in from your supplier to sell to your customers. So you have to try and manage, and that's looking at the predicted level of sales again, the lead time in terms of getting those goods in, the production and planning schedule that you have. The tendency will be to cut stock levels to the bare bone, and there may be great merit in that, but you have to be ready for an upturn if it happens quickly, that you have the stock or you have access to the stock. And that may well be sourcing new suppliers just in case. Your supplier at the moment could be experiencing financial difficulties. Will they survive the downturn? Will they be there when things come back? And if they're not, you need now to be looking at sourcing some new stock sources, the costs, the per unit costs, and so on. The other issue also with stocks at the moment is that because of the lockdown, there has been businesses carrying perhaps more stock than they would at this point, that is expecting them to move. So the security is an issue. Your warehouse may be more full than it is before. Is it safe? And I suppose one of the things that I was surprised, I'd listened to the news, is the rise in scams during the lockdown, which kind of surprised me in terms of internet scams and so on. But if you're carrying more goods and more valuable goods than you've done in the past or at any point, you need to be very, very careful that they are safe, and that they're safe from theft, but they're also safe from deterioration and obsolescence. And that really is something that you need to be careful of as well. The insurance will be quite important as well. Look at your insurance policy at the moment, and is the cover that you have sufficient to pay for the loss or damage to or deterioration of your inventory? And is cover necessary at the level that you have? Like if you have no stocks in the warehouse, is it time, can you contact your insurer and let them know and say, look, maybe you can ease off on the cost of the premium at the moment, and you might get perhaps some sort of relief from that. But assess your insurance cover for whatever position that you find in. And perhaps we can look at a tactical stock liquidation if that's possible. That we are overstocked perhaps in some cases. Can we offload? Can we have a fire sale or whatever and just get rid of the stocks, get cash flow coming in, and build then for the next season, hopefully when the lockdown comes to an end. Again, there's a possibility for what we call just in time, and there might be a little bit of a move towards that. Just in time basically is where we minimize the amount of stock that we carry, but we work with our suppliers so that the goods that we need arrive pretty much close to the day that we need them. Now, this is a whole cultural shift if you're getting involved in just in time, because you do need to be absolutely confident that your supplier will deliver on time the correct amounts and the correct spec of what you need. But it might be worth considering the benefits of a just-in-time system and minimizing the amount of stock that you're carrying at this point, and just basically putting the emphasis, I suppose, on getting cash through the organization and not having too much cash tied up on the stock of the business.
I would say there that just be careful about borrowing from the future to pay for today. Don't cannibalize your business. Be careful that you don't annoy existing customers because they bought something off you last week, and then you're trying to shift stock through and you're trying to sell it on cheaper. But also it's it's back to balancing, and it's a really difficult time to balance because supply chain is very difficult at the moment. It's difficult to get things delivered in some cases, depending on what the item is. But there are still things. I unfortunately moved into a new house 2 days before the lockdown started, so I've been trying to get stuff online and some stuff. Like I got a delivery yesterday of something that I ordered on the 24th of March. So there is a thing around customers getting fed up and annoyed. The just-in-time is a great thing if you're confident in your supply chain, because it does mean that your cash flow is running well. You have no cash tied up in that stuff. But be careful about really heavily discounting stuff, because it might be a bargain, but generally what you'll find is customers who buy in a big fire sale or a big thing aren't repeat customers. They will come first and they will leave very quickly afterwards. And you are technically borrowing from the future to pay for today. You could have got better customers and sold that stock to better customers if you can hold off at all. But sometimes needs must.
Yeah, and that's why I mentioned there that it'd be more of a tactical thing from that, that it might be a once-off, and it is perhaps inventory that you're just trying to offload quick, particularly if you're in the fashion business, for example, and you've bought in a certain clothes for the season. That season has now maybe passed, and you're stuck with this. So it might be in that sort of situation, look, yeah, we would have normally a sale of these goods, unsold goods in September, October, whatever. We might need to bring that forward at this point just to get rid of stock that we know won't sell anyway. I think that's the point we were making. The good thing also then, just moving quickly to dealing with the banks, and we mentioned this at the top, Owen, that it's a very different situation from before. The banks are open for business. The government is backing them, and the European Union and the central bank in Europe seems to be backing the notion that banks will play an absolutely key role in the recovery, that they are open for business and that they are engaging with their people. And it is important to have a good working relationship with the bank manager. Again, that sometimes is easier said than done. People run a mile because they owe money to the banks and they don't want to hear the bad news or open up the bad letter, but you can't run away or hide from it. But the banks are, I think, in a much better position than they were before, and seem to be more proactive, I think, in dealing with people.
Absolutely. The banks are, this is their time to shine, I suppose. It's their time to really show. I think I've been on record saying this a couple of times, but society bailed out the banks a couple of years ago when they were in trouble, and now it's the opportunity for banks to bail out society. They've missed a couple of tricks, but in general, they have been very good about what they're doing. I'm getting lots of positive feedback about people engaging with their banks, whether it's on a personal or a business level, on a commercial level. And the banks do have money available to them. They have money to give out. Again, we don't have the same problem. But even nicer, again, from your perspective, if you're looking for a loan of money, banks not only have their own money, but some of the banks have government money to give out too. That's money that the government will pay back if you don't, or they're providing guarantees to the banks on these things. So even if you found in the past that you weren't able to get lending, that's not necessarily the case right now. And the stronger your plan about the future and the more clear and precise you are about what your future looks like, the better it is the chance that you have of actually getting lending if you need it. If you need to borrow money, that you probably have a better chance now than ever if you've got a clear plan. But it's about communicating and displaying the information in a way that the banks feel comfortable about it. Remember, banks have to give out money to make money. That's how they make money. So they are in a much better position for themselves to capitalize on it. They're a business too, but they're in a better position to capitalize on it right now than they were 10, 12 years ago. And that means that's good for you. So do try and engage with your banks. And no, you had it on the slide a second ago. The easiest place to get money right now is your own bank. Like that, in terms of all the different sources of money. In general, rule of thumb I would have when it comes to borrowing money, the easier it is to get the money, or the quicker it happens, the more expensive it is. Now, the bank will put you through a bit of a rigmarole in terms of trying to make sure that you can actually afford to pay back the money, or that there's a plan in place of how the business is going to recover. But just try and avoid the whacking it up on the credit card or whacking it up on overdrafts and everything else, because that's the easiest way of getting. There's no application process, it's already done, it's all pre-approved, but it's also the most expensive and will cause you the most long-term damage.
Yeah, and I think when you go to the bank, if you are going to the bank, just have your P's and Q's ready, because the bank is going to ask you, I mean, how has the COVID-19 crisis impacted your business, and what have you done already at this stage? So you need to go in to be as lean and fit as you possibly can by the time you get to the bank and say, look, I've taken these actions with my stocks, I've taken these actions with my debtors, it's paying dividends, I can see cash flow beginning to come back, but I just need to get over this. And they're going to be looking for the last set of accounts that you have, any tax compliance certs, cash flow forecasts. We're back to this again. They'll be looking for cash flow forecasts for the next 3-6 months to look at the repayability of it. So when you come to the banks, I mean, anticipate your problems early. If you're having cash flow problems, it's time, go now rather than wait for the crisis to really hit in July when your forecast is telling you you're going to have minus cash. It might be very late at that point to try to put finance in place quickly to avoid payments bouncing from you. Banks might be looking at your own willingness to invest your own funds. So again, how confident are you in your business? It might be indicative that if you're putting in some of your own funds and matching it with some of the bank funds as well, it might send a message to them. And again, to use your accountant and your advisor effectively on this. I've had 1 or 2 queries also on about the revenue commissioners, and I think hats off to them where we can, in that they've been quite proactive as well. And the message seems to be saying from them is that, look, if you have VAT returns to go in, or if you have tax returns to go in, submit the paperwork, submit your return. But there does seem to be a willingness perhaps that they can delay certain payments. And again, it's about engaging with them. For SMEs, for example, I know that the revenue commissioners have said that tax returns should be submitted on time, that interest on late payment of tax for Jan, Feb and March PAYE for VAT and PAYE has been suspended at this point. They're not enforcing debt at the moment, and the current tax clearance status will remain. So there may be more action from the revenue commissioners in the weeks ahead. So again, just monitor what they're saying, and again, keep in contact with your accountant as well in relation to this. But they do seem to be saying, get the paperwork in, let us know what the VAT position is or the PAYE is, whatever. We'll figure out the payment later. There will be perhaps a moratorium on giving you some time and some leeway in relation to that.
And just be very careful on one thing. If you are deciding, and I think there was a question on this, in fact, but if you're deciding that you're not going to pay the VAT right now and you're going to keep it for cash flow purposes, be careful that what we would call Parkinson's law doesn't kick in, that you feel richer than you are and you feel that you can afford to pay other things and you start eating into that VAT money. What I would say is if it helps you sleep at night, you don't pay the VAT, I would look to put it into a different account, that it's not sitting in your main bank account, that you just feel that you've got more money than you actually do. And by separating it off, it'll make you think twice before you dip into the VAT money or the PAYE money or whatever it is that you're due to pay to revenue and that's owed to revenue. So be careful about that. Be very careful about the idea of spending, again, borrowing from the future to pay for today. You still owe the money, but they're just not looking for interest. They're not going to charge you interest on some of the things that they're looking at.
Yeah. I suppose just we've gone slightly over time here, and I apologize for that, but it's a huge area. And I suppose one of the final few points I just want to make is just work with your accountant. Work with your accountant. That you're paying them good money. You get good service from them. Work with them, not against them. And I know from my time working as an accountant, there were certain clients that would arrive on the stroke of midnight the day beforehand with all their receipts in a shoebox and ask us to sort it out and run and leave it from that. But I think we have to engage with them at this point and just make sure that, you know, by engaging with them, that they're looking after us. They'll help us in our budgeting. They'll help us in our capital investment information. They'll help us dealing with the banks. They'll help us dealing with revenue and so on. Very quickly, and all this information will be on the website, these slides on the Griffith site in a moment, but there's significant help out there from a variety of different sources, and sometimes it is industry specific as well. But go and look and seek this out. No, I would look at it as being kind of gravy on the side. My business, the first thing I will do is try circle the wagons and get my own house in order and be as lean and as fit as I can. And if I can get some assistance on top of that, that will greatly ease the burden then. But there's loads of different areas that I've mentioned here: the chambers of commerce, the local enterprise, microfinance, the IDA, and a whole range of different sort of conditions and subsidies and so on are out there. Now, eligibility criteria do apply. You're not guaranteed to get this, but there's a wide range from a wage subsidy scheme to the credit guarantee scheme, the working capital loan scheme. There's a trading online voucher scheme, microfinance loans. There's a lot of them there. Also from with going back to the revenue commissioners, again, the government, I'm sure, will work with the revenue commissioners and perhaps help with the interest on late payments. Again, might be extended from that. And we also then perhaps have a reduction or elimination of commercial rates, perhaps a moratorium that they don't have to be paid for a few months. So there's help out there, and you need to inform yourself. And the links to these will be placed on the website as well. But ultimately, at the end of all of this, you're at an extraordinary time in the history of this country and the history of business in this country. And it is a time that we need to just refocus and reboot the business. And this is a revolution that needs to happen. And we have to look at our strategy and think that the world is going to be quite different in the next few years to the way that we've always done business. Upskill and have the skills necessary to engage in this new business, this new economy. And don't, again, oversee or overlook rather your own requirements or your own legal requirements as a director of the business. Those duties stay very much intact, and it's up to you to make sure that you have that you honor those duties to employees, to creditors, and so on. And finally, I'll just leave you with this. We go back to what we said. You assess, you plan, you do, and review, and you rinse and repeat over and over again. Your budget, you do it for June, July, August, you do it the best case, worst case, medium case scenario, you look at the situation and so on from that. And that's basically what I have to say. Owen, you know yourself the impact that it can have, unfortunately, timing and everything. I have a friend actually he's exactly the same boat. He'd written a book and was about to launch it as well on the history of Thomas McCurtain here in Cork, and just at the wrong time the lock in the end. But the book is available, and I've seen it, and it has some really good tips, and I can't recommend it highly enough. So well done, and that's a great project.
Yeah, no, it is online. If people want to buy it, go for it. All the big shops, all the big online stores. But one thing I would say to you, given that we're talking to small businesses, ring your local bookshop before you order it online. Some local bookshop owners are posting them out to try and compete. And if you are going to buy the book, or any book, not just my book, ring your local bookshop and see if they'll do it before you go to one of the bigger ones. Not to say the bigger ones aren't worth your money either, but just to say support local if you can.
Shop local, exactly. So thanks very much for listening. I appreciate it's a huge area, and we went slightly over time, but Sinead, my apologies for eating into that time there. But
that's absolutely fine. Absolutely fine, Noel and Owen. The viewers are really enjoying it, and there was no way I was going to interrupt you. But I do have some lovely questions coming in. If we can just take a few minutes to answer some of them. So the first one comes in, it's from Catherine, and her query is in relation to, she's a small business owner, and she has one employee on short-term layoff. But her question really is, how long do you think the supports will be there for small businesses? the government support. If you want to take that one on, yeah?
I'll go with that one. What I would say is the Taoiseach said last week in the Dáil that phase, the June 8th, I think it is, that phase, people aren't going back to work in the middle of June, and therefore the $350 a week and the wage subsidy will continue to them for those people. There are other people like the tourist sector, which aren't going to be back till late July, early August in some cases. The fact that he has now set a precedent to suggest that he said it in the Dáil and he said he was happy to announce it, that these things are going to continue to mid-June for the people who haven't gone back to work, would suggest to me that it can be continue on. But one thing the government have to get right here, and they really have to get it right, there was no point in them borrowing all this money and spending all this money up to now if they're not going to continue to do that. If they follow on from this with real austerity, it destroys, they will fix possibly, as we said already, the macro economy, but the micro economy is really where the growth is going to come from. And that's really important, that that sector doesn't get hit at all. It's really important. The whole genius around the whole wage subsidy scheme is that people will feel when they've gone through this that they managed to get through it financially. Whereas it's a very different impact if you got laid off, you sat at home and you didn't know where your next pay packet was coming from. You spend very differently when you go back to work then, whenever you get back to work, than you do. You feel a bit more robust about everything is if you continue to get paid, you continue that connection with your employer, and you continued working, your whole purpose and meaning and everything else just gives you a boost of confidence that you got through one of the worst crises in history and you still came out the other side financially. So that's why it's really important, and why I would hope that whatever government looks like in the future, that austerity isn't the next thing. And I do believe the supports will continue based on what was said by the Taoiseach from the Dáil last week.
Super, thanks, Owen. Hope that answers your question, Catherine. The next one we have is from, I have a number of debtors who pre-pandemic have always had problems getting paid. Is it now time to just cut them loose and take the bad debt hit? Who'd like to take that one?
I'd be very slow to cut people loose forever. But what I would say is that, like, traditionally, when I operated as an accountant, the advice we always gave to people was to classify your debtors into kind of different groups: Group A, B, C, and D, or your potential sales into groups A, B, C, and D. And Group A were those who always pay on time. They're good, that there's no problem with them. Group B, they'll pay, but it's a bit of a struggle, but they'll pay a few days later or whatever they will. C, yeah, look, you're emailing them, you're calling them, they break your heart, they eventually come, but it's very, very late, and you have to kind of wonder. And then D, people who just will not answer your call, and so on and so forth. So anyone who falls into D, it's not worth dealing with these people. If you're selling them and they're going to ground and you're not getting, just cut them loose. The argument then is where they fit in terms of B's and C's. In the good times, yeah, you can afford to get rid of the C's and concentrate on the Group A and Group B. In the bad times, particularly, and maybe when you're looking to bounce back, you may have to take a bit of a chance on dealing with the Group C's as well. And part of this as well, and I mentioned it earlier, is maybe look at the possibility of getting involved in invoice discounting. It began to kind of take, again, a bit of traction in Ireland in 2016, 2017. And this is where there are organizations out there which will pay you upfront for your debtors. So that they could give you 80, 90% of the debt. Now they charge you for it. There's a fee involved in it, but it might be worth looking perhaps in the short term. It isn't something perhaps that in any business I would rely on, but there are certain organizations out there that you can sell the debts against them. Now there are different forms of that. You have factors and you have invoice discounters, and to know the difference between the two of them. Effectively, with invoice discounters, you're selling a debt to them. Your customer doesn't know though. So I sell you goods for 1,000. Within 24 hours, the invoice discounter releases 90% of that to me. So I don't have to wait for the 40 days for the customer to pay. When the customer pays, they pay into a bank account in my name, but it's to the funder, to the invoice discounter, who keep their fees and then send you the rest of the debt from that. So it might be worth, perhaps, if you're having difficulty getting debtors to maybe look at that service as a possibility. But certainly the classification of the debtors and your customers into groups A, B, C, and D That's a judgment call, unfortunately. But I'd be very slow to get rid of repeat customers, but certainly people who have are not answering my calls, I'd be very slow to send them out more goods and send them more goods in the future. You know.
I do think it's about where you spend your energy there. Like, again, if your energy would be better spent and your headspace would be better used on your better customers, don't give up on it completely, but don't let it consume you, and make sure you're focusing your energy that you have to look after the good customers who will eventually pay you. The invoice discounting, the factoring, all that stuff, what I would say is it is an option for some people, but I would try and exhaust all the other things before I go near it personally. That's the way I would look at it. And I just think that it is a very useful thing, but remember, you may have done better yourself by discounting the product in the first place by 10% or doing a sale. So think about it, or told your customer, pay me in 24 hours and I'll give you 10%. You've done figures where it shows just the impact, the 37% APR on it. So think about what you're doing and think about all the other options before you go down that route, would be my opinion on it.
Yeah, I'd agree. I think the invoice discounting has its place in certain circumstances. It's not for everybody, but it's worth investigating. And certainly, I know that if you just go to Google and put in invoice discounting Ireland, you're going to get 3, 4, 5 companies up straight away. And you can go in and learn what it's about. But beware, there are advantages, but there are significant disadvantages as well. It can be costly as an exercise, if nothing else. And I think sometimes companies might become over-reliant on it. And as you say, there might be better ways of financing your debtors rather than that. But it is an option. That's all I'm saying, just raise it. Because I know a question had come in advance about the use of invoice discounters.
Brilliant, thanks for that. That question seems to be coming in quite a bit. And this one as well, which really pertains to small businesses, and that is, a lot of my customers pay my company by direct debit in payments over 4 months. And I'm noticing that they're just cancelling their payments as the crisis continues. So the hope is that, that they'll return as another customer, but any ideas around, and I know you mentioned it, Noel, earlier, cherishing your customer and kind of having that relationship that they will come back again, but cancelling direct debits, that sense of you have no control over that. Any thoughts on that for small businesses?
Yeah, I suppose it is a risk, and I suppose we have to kind of reach out to them and realize that like everybody's trying to play the same game. You're trying to expedite your debtors and delay your payables, and everybody's in the same game with that. The customers that you've had for many years, you've built up relationships with them. What I said earlier is that nothing should be done, I think, unilaterally here. There has to be some sort of negotiation, and you can go back to them and perhaps offer them maybe the discount or reschedule the direct debits. Take an amount over a longer period of time, perhaps, or to give them a discount and spread that. But you have to get inventive with it as well. But certainly, one of the things I was saying earlier was to monitor your individual debtors and look for people at this stage who are making these decisions on their own not to pay. Hopefully they'll remain customers in the future, but again, it does damage the relationship between the parties. So I would reach out. I'd try and have some sort of olive branch and give them options, that it's not the direct debit or nothing, that there is sort of scope on your point, maybe to extend the payment, to give them a discount or whatever. And Owen, I think you'd probably go along with that sort of advice as well. You deal with that a lot.
It's a really difficult thing to do in terms of when you're owed money and you're giving out and you're giving up on collecting it. But the communication here is absolutely key. And what I would say is there's nothing more empowering, particularly when we all feel we're out of control. There's nothing more empowering than recognizing the signs of someone who's caused you trouble in the past in a new customer and deciding not to take them on. And I know that's a very surreal thing for us where we are right now. We made a decision about that about 10 years ago in our business, where we said, we don't take everybody. We take certain clients, that's what they look like. And sometimes it just comes down to personality. We're very get in deep and down with people's lives and what's important to them, what their goals and values and objectives are. So the personal click has to be there too. But it's very empowering when you start to say no to customers because you recognize something from previous customers. Because what happens then is you expend no energy on them and you start chasing the customers that suit your business. And I do think that these people who have stopped direct debits without communicating with you are certainly C's and possibly D's when you talk about your A, B, C, D. And the sooner you recognize that, the sooner you know how much energy to expend on them. And that's really important, because it'll just think about what you want your business to look like in 5 years from now and what type of customers you want to deal with. You want very few C's and D's and you want all A's and B's. And these customers are starting to suggest to you that they are C's, maybe even D's. But don't give up on them just yet, because it's just not the right time to be doing it. So I know I'm speaking out of both sides of my mouth, but what I would say is that in the future, as things start to wrap up again, it's a really important lesson to learn who the ones that were, when the chips were down, really let you down. And that might be how you build your business in the future.
Super, thanks so much, Owen. So there's a couple of very nice comments as well. Thank you, Noel and Owen, very informative and really appreciative given the time. Excellent content today. It's highlighted a lot of the areas I overlooked. Thanks to Chris for that. And I'm going to just take one more before I pass back to Michael. And that one is this one is directed for Noel, actually. A question in regard to revenue payments for Noel. With the revenue giving no penalties on late payments, should we hold off on paying revenue liabilities and use the money to help cash flow and pay when things improve? So it's you mentioned it earlier, Owen.
I think, Owen, to be fair to you, you mentioned you took the words right out of my mouth there for that one, in that the revenue are saying, okay, we'll give you time and space to gather the funds, but I think what they're looking at is giving you time and space to get the money in to pay at a later stage. They're not saying, look, don't worry about paying for the next 3 or 6 months, whatever it is. The worst thing is that, you know, you get the money in, and when you go, the jar is empty, and now you're in the height of trouble with the revenue commissioners. So it was a good phrase, Ron. I'll borrow it from you again there. Don't think you're richer than you are. You've collected money on behalf of revenue. That's their money. That's their money. So don't ever lose track of that you're just the conduit for getting the tax to them, particularly the VAT. And that's not your money in the first place. Now, it could get you out of a bind. It might be that in the short term, you could use perhaps that money to pay, I don't know, your week's wages to the workers, but you do have to be careful that when the revenue start putting the dates back in and saying we expect the payment for, you know, March, April, or January, February VAT to be paid at this date, that you have that money ready to go then from that, because that will just open up a whole new world of problems that you don't. So I think the revenue commissioners, to be fair to them, are trying their best, but they're not saying you don't have to pay tax. You know, they're just saying we'll give you time to get it in. But so be very, very careful. Be very, very careful. I remember that just from years ago. When I was a junior accountant starting out, I mean, that was one of the things that I always remember. A client that we were involved in a liquidation, and this is what had happened to him, that he hadn't got permission from them, but he had taken large amounts of VAT, and instead of doing the right thing and handing it, he used it to try and grow the business a little bit. Didn't work, hadn't the tax to pay, and the whole thing collapsed. And we were in, and I think the poor, I always remember kind of wondering, his head in his hands, where did it all go wrong? So you have to be very, very careful with the commissioners in that, but don't spend what isn't yours if you can't replace it.
Okay, thanks so much for that, Noel and Owen. It has been extremely practical and informative and engaging presentation. I'd just like to thank you both for your contribution today, and best of luck on with the book. And I'm just going to pass you back over to Michael to just wrap up the session today. Thank you.
Thanks, Sinead.
Thank you.
Thanks, Sinead, and thank you so much, Noel and Owen. That was absolutely fantastic, and the feedback has been flying in here in the background, and it's also positive. So thank you so much, really appreciate that. Thank you also to Tomas and James, who joined us at the start. And also thank you to the team working on this project, Geraldine, Sean, Anthony, and of course Sinead as well, who has been managing the Q&A thread today and leading the session today. So thank you, everyone. We really appreciate you joining us today. Please do engage on social media via the hashtag Reboot2020. Thank you to all the businesses that joined us today, those who are part of Chambers Ireland and other small to medium-sized businesses. We are delighted to be providing this series in association with Chambers Ireland and Griffith College, Dublin, Cork and Limerick. So we look forward to seeing you again tomorrow, when we'll be when we will be discussing who do I need to work with to deliver my business development plan. So until then, thank you so much, and thank you to all the speakers, and stay safe and well. Enjoy the day. Thanks, everyone.
Thanks, Michael.